I mean, yeah, I'm bullish on gold, silver, and hard assets, mainly because I think the 40 years of the everything bubble and financialization are over. And I think one of the big symptoms indicating that is what President Trump is doing in terms of tariffs and like trade and trying to bring back manufacturing to the U.S. I think this is almost over. And commodities and gold and silver hard assets, they're gonna they're gonna see a lot of money flow into them, and they're such small markets now that it's gonna be. In my opinion, explosive. I'm not telling people to do it. This is my opinion.
Gold continues to surge to new highs as cracks emerge in the global gold market. Recent data highlights extraordinary gold flows in recent weeks, fueling record-breaking price levels. While these movements are often attributed to concerns over potential U.S. tariffs on gold and silver, a more profound and significant underlying shift appears to unfold. Mario Innecco, a financial markets and macroeconomics analyst, remains bullish on gold and silver, citing the end of a 40-year era of financialization and easy money. He views the ongoing transition as a gradual reset, but warns that a more profound monetary shift could be approaching. Innecco suggests that significant global powers, including the US, China, and Russia, may soon come together to forge a new monetary framework as the dollar-based system nears its breaking point. Recent reports reveal that US and British banks are shifting substantial gold reserves from London to New York. This move is driven by a price disparity, with gold trading about $20 per troy ounce lower in London than in New York since early December. By relocating gold, banks can mitigate potential losses in gold futures trading or capitalize on higher profits through new futures contracts. Major financial institutions, including J.P. Morgan Chase and HSBC, are taking advantage of this opportunity. J.P. Morgan Chase plans to transfer approximately $4 billion of gold in February. Mario Innecco parallels past monetary shifts, including Roosevelt's 1934 gold revaluation, and suggests that a similar reset could occur around 2027. He predicts that gold will be at the heart of the next monetary system, serving as a unifying force among significant powers like China, Russia, and the US. Let's delve into the video to gain further insights. Before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
As we see all the fiat currencies drop and gold go up quite a lot. I mean, since the beginning of this century, we're up about 9–10% in all the major currencies. That is a gradual reset, but we could have something more serious where countries like the US, China, and Russia get together and decide upon some kind of monetary agreement, because that's the only way to keep, I think, trade and investment between nations on a stable basis. I think the last 50 years of the dollar standard or the fiat currency standard is on its last legs. So yeah, it could happen. I mean, it could happen this year, could happen next year. I've done some research about like cycles, monetary cycles, and if you go back to 1933, that was the last time there was a major monetary event when Roosevelt made gold illegal. Then he revalued gold in 1934, and if you add, let's say, 47 years to that, you get 1980. That's when the gold-silver ratio went down to 1, and Volcker allowed rates to go up to 20%, and gold topped, and then interest rates started going down, and you add 47 to 1980, you get 2027. So I think we're due for some kind of event. And even Secretary of the Treasury, Scott Bessent, said in an interview before even the elections that he thinks we are nearing a Bretton Woods-like realignment. So that can only mean some kind of conference between these great powers. And hopefully Europe will be involved, because right now it seems like the U.S. is aligning. It's more friendly with Russia than Europe. They voted together in the UN yesterday. vis-a-vis the Ukraine situation. Well, I think one of the most important things about buying physical gold and silver is that you need to be patient. And you need to think like a central bank. You have to think of how many ounces you have of gold and silver. And like today, that they were speaking, gold has gotten hammered. But I've looked at the year-to-date performances. Gold is up about 10%, and the Nasdaq is down about 1%, and silver is up about 9%. Uh, yeah, I'm bullish on gold, silver, and hard assets, mainly because I think the 40 years of the everything bubble and financialization are over. And I think one of the big symptoms uh, indicating that is what President Trump is doing in terms of tariffs and like trade and trying to bring back manufacturing to the U.S. I watched Luke Groman speak to Tucker Carlson, and he said he talked about the Dutch disease is when a country finds a commodity and focuses only on that commodity and neglects the whole economy. He gave a really good analogy of that, and he said that the U.S. has got the dollar disease. They've been borrowing and spending for 50 years, and the whole economy is like rotting away. The real economy. The only people who are doing well are Wall Street, private equity, hedge funds, because they play the paper game and they use leverage. So I think this is almost over, and commodities and gold and silver, hard assets, they're gonna they're going to see a lot of money flow into them, and they're such small markets now that it's going to be, in my opinion, explosive. I'm not telling people to do it. This is my opinion.
Gold exports from Switzerland surged in January, with shipments to the United States reaching their highest level in at least 13 years, even as exports to top consumers China and India declined. Switzerland, a key global bullion refining and transit hub, along with Britain, home to the world's largest over-the-counter gold trading market, has seen a significant increase in gold transfers to the U.S. in recent months. Some market participants speculate that this trend is tied to concerns over potential tariffs under President Trump's trade policies, which could impact gold deliveries. According to Swiss customs data, gold exports to the U.S. soared to 192.9 tons in January, up from 64.2 tons in December, marking the highest monthly volume since records began in 2012. Mario Innecco speculates that 2,000 tons of gold may have been moved to the U.S. over the past 2.5 months. He suggests this could be linked to the U.S. Treasury closing out its gold leases, or, more alarmingly, that some major depositories, such as Fort Knox, may hold far less gold than officially reported. Innecco also questions the role of the LBMA and COMEX, describing them as bucket shops that primarily engage in paper trading rather than facilitating actual physical gold transactions. Now let's redirect our attention to a video.
I saw the report from the FT on January 29th, and I'll never forget that date because I think it was the most important date for the gold market since Gordon Brown announced he was going to sell half the UK's gold. And why do I say that? Well, I was coming out of sports physio. I had a bad elbow, and I got a notification from the FT saying that there was a stockpiling of gold going to the U.S., and I read the article, and it said that the spot price was now T plus 4 to 8 weeks, which I thought was shocking because the Bank of England is supposed to have 400,000 of those 400-ounce bars. And from what I've read, only about 2% of those bars have gone over to the U.S. So why do they have to delay delivery? So, and now you're talking about Switzerland. Yes, there's gold going from everywhere to the U.S. And a lot of people are saying that it's to do with arbitrage, that they buy in London and sell on COMEX because of the premium. but they used to use EFPs for that, exchange for physical, and that term exchange for physical is really misleading, because I remember when I worked as a futures broker, I traded the government bonds, but some of my colleagues traded gold futures and silver futures. And I used to hear about EFPs, and I asked them, "So are you taking delivery?" And they said, "Oh no, this is just a paper transaction." Futures brokers hate taking delivery. I asked my boss once, because we had a client who traded a lot of gold and silver, if we could take delivery, and he said, "Forget it." So, some people speculate that there's 2,000 tons now gone to the U.S. over the last 2.5 months. So, I think personally, it's to do with the U.S. and the Treasury closing out its leases on the gold, or maybe there isn't much gold left in some of the depositories like Fort Knox. Who knows? And I think, yeah, it sounds weird, but I think the LBMA and the COMEX are 90% bucket shops. They're just trading the price of gold, betting on it. But when someone comes and asks for delivery, it creates a huge problem. And that's what I think is happening. And I think I think the cat is out of the bag, Daniela.
The evolving gold market dynamics indicate a potential shift in the global monetary system. The recent large-scale movement of gold from London and Switzerland to the U.S. has intensified concerns about the stability of the current financial framework. Long-standing criticisms of the LBMA and COMEX for prioritizing paper gold transactions over physical deliveries are gaining traction, as growing delays in gold availability cast doubt on their reliability. If the U.S. is actively securing physical gold in response to increasing skepticism surrounding the paper gold market, it could mark the unraveling of the decades-old paper gold system and the emergence of a more tangible gold-backed financial structure. If gold becomes the foundation of a new economic system, how do you see it impacting global trade and currency stability? Feel free to share your thoughts in the comments. If you found this content helpful, give it a thumbs up, and remember to subscribe to stay updated. Thank you for being a part of this journey with us.